The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon until 1 p.m. 877-927-6648. Let's look at this market. The E-minis are down 6 at 27.09. This is a very important phase, and I've been discussing it for a couple of days, especially yesterday. What we did for the subscribers, we tried to play the bounce. I said there's a peak C. I think we're going to try for a peak D, a leg D. If it doesn't work, that's fine, but I'll explain in a moment what we were looking at. But let's first look at this particular chart right here because it's so important. This is the E-mini 120-minute chart. You see from the low that what was made right here on the 22nd, just going into the 22nd, that was really at midnight, around about the 21st. The low was 26.82. And then it runs up in a series of highs. It goes to an unusual peak G/C at 27.87. So it goes from the 2680s over 110 points. Just huge. Look, 27.87. It gets there at exactly the same time, but on the 26th of February, pulls back, holds a 9-period moving average. See the MACD starting to turn. You see the stochastics already starting to fall. And then it has a rogue wave spike to a slightly higher high, 2789.75. And that was that early morning pop on the 27th, going into midday. Now look what happens. Pulls back and makes lower lows and lower highs. And there's a left side, right side price time match to the 2696.50 low of right there that I showed subscribers to my opening call this morning. And that was at 4 o'clock on the 22nd. Remember, 120-minute chart? And it comes right down to the 2698 level. So a point and a half away. Has a pop-up and then fails. So I just wanted to explain that the patterns that I keep looking for still manage to work on smaller time frames. And the most important thing is like that rogue wave, which spiked just barely above the previous high and then failed. That's kind of what I'm starting to look for more and more. Okay, now I can get into the nitty-gritties. I'm going to run all the numbers, and then I want to explain to you what we're doing here. In fact, we're kind of flat now in terms of the Dow, because we got taken out for a small loss in the short-term trade that we wanted to go from peak C to leg D. Had an opportunity to get out. It just all happened too quickly. I wasn't able to because my newsletter goes out at 8:35 in the morning Eastern time, and that's it. Very seldom do I have updates. Now, what's really important, I'm going to change this chart. Look, this is the ES continuous contract. We have made a peak D in the monthly chart of the E-mini. This candle here is what I call the Chapman wave Roman candle. We're going to spend a lot of time talking about it because it's either going to work great or it's going to fail, just like anything else. But the way to look at it is if certain parameters are hit on the downside in these various candles, monthly candles, I believe we go and retest the lows that were made 3 weeks ago on the 9th of 2 weeks, whatever it was, on the 9th of February. And then we've got the internal low waiting for the residual low. The only way this can change is to have something that just triggers another huge move to the upside with all-time highs made in the Dow and the S&P. I don't care about the IWM so much. The Qs we're almost there. So now let's go through our story. We'll go one at a time. The Dow. The Dow right now is at, the Dow is at 24,981, down 48. So I had a question. A lot of people seem to understand exactly what I'm looking for, especially most of my subscribers from notes that I've got. But every once in a while, someone comes up and asks a question that is a question that I'm not 100% sure that it was understood exactly what I was saying. So I'll just try to clarify it again. The high that was made on the 26th of January, 26,616, in the daily chart had a 30, I should know this, but it had a 12% correction and a 3,300 point down move, rallied very sharply, rallied to the 25,800 level 3 days ago, and is now pulling back. You see this line right here. On the left side chart is my daily chart of the Dow. In the middle is the weekly, and on the right is the monthly, and here's the 120-minute chart. What I wanted to show you is that within the context, let me just get, okay, in the context of the three patterns I usually look for coming off a bottom is a V-shaped pattern. Speed and price are very important. You don't want to keep moving to the right. You want to just go in about the same angle, or at least close to the same number of bars to the right side as you have to the left side coming down. I call that the left side, right side, price, time, Chapman wave match. Okay. But coming off a pretty serious bottom, after what I consider to be a very serious high, I want to see the pattern that is the one that is the most formidable, the arch formation, the dreaded H, the lowercase h pattern. If there is a failure, and you take out halfway of the gain that you've made from the low, in this case it'd be, I don't want to do it exactly right now, I'm just going to say, it happens to coincide with the Chapman wave falling axe, declining trend line, remember the falling cone formation, lower highs and much lower lows. So that makes this area right here at 24,700 really important support over the coming few days. I'd say a week. If there is a close below, it will look definitely like the MACD and stochastic, or stochastic still at 82%, are going to fail. And if you start to close under this trend line, it's very, very negative. So in the 25,500s, we'd say you're probably going to test the 24,200s, which in the monthly chart is going to be really important, especially the weekly chart. Okay, so you have the parameters. On a very short-term basis, you could still see a pop up to the 25,400s. We're at 24,984, right? Let's call it 25,000, so it makes sense. So if you're at about 25,000, you could pop up about 400 points. If at any point in March you take out decisively, and it has to be decisively, the high that was made on the 27th of February at 25,800, that would mean going into really close to 2,600, preferably touching 2,600. Should only 1,000 points is not a big deal in these circumstances. If it can do that, then we're looking at slightly higher highs with a really strong base in the 24,500 level over a period of many weeks. The H pattern probably going to an M pattern doesn't make an all-time high. I'm not sure there's enough impetus to the upside at this particular point to be able to do that, but there is enough emphasis to move much higher if we can, in the next couple of days, in a week, try to get to the 25,000. Oh, really, it has to be the 25,400s. I'll be right back. Dow's down 37, S&P's down 3, and we'll go through the different indices one at a time.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, so now I need to give that little preamble because now I want to show why I say that the move yesterday as I was doing my show, having gone from up 160 to a pullback right there at 10 minutes past 11, why it was so important for my work. The sell signal from 26,616, the high, essentially is still intact based on the weekly chart of the Dow. But it's this monthly chart that is really important to me. And I'm going to expand this because we're going to see it in so many charts. This particular configuration, I don't want to go into it right now. I'll do it maybe Technical Friday tomorrow. We'll talk about it. But this candle, it's a little bigger than usual, but it's a monster. And it's what I call a Chapman Wave Roman candle, where the price opens up and has just a tiny little wick, the little wick that you want to light for the candle, firecracker. It plummets to a low, and that same candle then closes about halfway or maybe a little more than halfway of the entire length of the top to bottom. And what happens within 1 or 2 bars, if there is a trade, doesn't matter what time frame, if there is a trade, and that trade in a shorter period, we're talking monthly, so I'm actually going to say in this case on a weekly basis, if there is a close in the Dow, and this applies to almost all the indices other than the Qs, closes at any point on a weekly basis below the midpoint, I'm calling it 24,300 for now. If it closes below that, there is just a really good chance that not only will there be a continuation of the decline, but you will test or maybe even break the left side low bar. So that kind of fits into this whole internal and residual low. How does it get negated? It gets negated if there is one candle that closes above the entire candle. In other words, the high that was made of 26,306 in February in the Dow. If it closes above that, preferably for 2 months, in this case, monthly bar, that would be very positive and suggest that the all-time high is going to be taken out on the left. So I'm just making it real clear. That's the way I'm looking at it. As it stands right now, we have no Dow long positions. I was about to just reverse this morning, go to the short side. I thought I'm just going to give it a day. I might miss 100 to 200 points. It's not the issue. If we are going down deeper, you've got plenty of time. I want you to go one step at a time. I want to see how the other indices do. Let's go to Sylvia in Tampa Bay. Sylvia, how are you?
Basil, I need to ask your opinion on two ticker symbols, please, and then I'll hang up so I can hear your comments. The
Sure.
first one is AAOI, and then the second one is United Steel, okay?
So let me just write this down. AA?
OI. Apple,
OI.
Oprah, India.
And the next one is?
X, United Steel.
Okay, very good. Okay, so you'll be signing off and listening. Okay, so folks, what we're looking at is AAIO. What is that? AAIO. Are you AAIO? Oh no, Sylvia. AAOI. Okay, I got it. I was going to say I did something. Applied optoelectronics, like electro something. All right. Yes, I know. Thank you, Alan. She said that she was going to be listening. So immediately I look at this and I see a huge gap down in I don't even know what it does other than applied optoelectronics. I suspect electronics. I can't see the full title. Okay, here we go. So this made an AB. It made a peak C in the monthly chart, and it goes all the way from single digits to just over 100, and then it collapses. So obviously, whatever. There it is. So here we go. A, B, C, D. It makes a peak D. I thought that was wrong. It made a peak D from the 2015 January low under 10, and it screams to the January. Is that July? Yep, July high of 103.41 of 2017. It's made what I call the Eiffel Tower pattern. Oh, we haven't seen many of those lately. Straight up and straight down. So immediately, and the weekly closes under the 200-period moving average. Is trading right now at 27.96. I do not like gaps that are not quickly attempted to be filled, but I do like gaps where the low bar that's made on that gap day has not been taken out. Now it's trading as an inside bar. It's saying to me that whatever happened, obviously, either there was some failure in an application of something, or it has a negative. It had a negative outlook, but it hasn't broken down. So at 27.96, this is the only way I would do it. I like to look at the daily to show you something. You see the way it's very seldom able to hold above the black line. That's the 9-period exponential moving average. I love the fact when I opened it up, the first thing that really popped out to me is on the October the 12th, 2017, closes at 58.84. Next day, oops, it opens at 47.30. So there's one gap. Has a little gap to the upside. It went sideways, now down and then sideways, gapped up, ran, and then pulled back. It's had a couple of gaps. The last one was a gain to the downside. I always look at stocks that are like this, and I say, are there 3 gaps? Whoa, there it is. So it makes its high right there at 103.41 in July the 27th, 2017. Is that a peak A, B, C? Yep, it goes to a peak D. Has a right shoulder failure, makes that H pattern, plummets down, closes at 93, round number low on the 3rd of August, and the next day, kaplop, opens at 75, round number high, round number open, goes to 64.40, and that's all she said, because from there on, they kept. So it's had 1 major gap, 2 major gaps, now it's had the 3rd. This time, the sideways move has lasted a little longer. So, number one, when I look at a stock like this, this is where I actually sometimes like to look at the fundamentals. I would actually avoid this, but I'd like to look at the fundamentals just to see, is there some kind of a story here that it keeps doing? Is there something wrong with the stock? So I'm going to say there are 3 things that I do immediately. When I look at the 3rd gap, I'd love to see if it tries to fill that gap quickly. The others, it didn't. This one, there's a chance that it might. So I'm going to make two suggestions. One is, if it can hold at 27.91, look, the market now, the Dow's down 119, S&P's down 10, the comp index is down 24, and this little thing here is down a penny. So I'm going to make the suggestion, and this is going to be tough, because within the context of a risk reward, I do like to look at it in that context of Sylvia. I'm going to say, follow this a little closer, because I don't think you're going to miss out anything. Let's just say it pops up tomorrow and it goes to 28.50. That's a good sign. But I'm afraid that third gap is the one that always worries me the most, except that's also very often where you're getting a completion of all the downside, the most negative action that you've seen over a period of a year or so. And that's where it tries to stabilize. So I'm going to do this. I'm going to do a little more work during the break. When I get back, I'd like to talk about U.S. steel, because that's part of what I look at. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. So just going back to AAOI, trading at 27.92, down a penny for Sylvia in Tampa Bay. Sylvia, I would like to say that if you just nibbled at 27.87, treat it only as a trade, so much so that I'd have a stop under today's low. I would just make it as tight as possible because it's holding darn well considering everything that it's been through. 27.11 would be a stop, so it's like an 80-cent stop. It's only a small position. If it can close above 28.75, it should at least try to fill some of the gap. 29.03 is the 9-period exponential moving average. If you had to just say to me, would I buy it, sell it, or stay away? Right now, I would stay away, looking at the weekly and monthly charts. But since something obviously you are following quite closely, I'm going to suggest to you that, yeah, give it a chance at a bit of a pop-up. The 120-minute chart right here, let me just look at that. It's kind of steady. It's not great, but it's steady. And obviously, you've picked it for a reason. If you're holding it because you've been long, my rule of thumb is you got to take something off. Absolutely take something off. And every time it rallies from here, you've got to raise the stop. That's a completely different thing. It's not what you said. I'm just saying if you're looking at it fresh. Now let's go to X. Very frustrating for me because we had one of the steals at a really great price. It did really well for us, and then we got stopped out at a good profit. And I just never went back. And then we got into a steal yesterday, 2 days ago, which should have held very well, and it just took us out. And then it took us out for a 2%. Well, no, I'm sorry, it was more than that. It was a 5% loss, which is really unusual. I never like to take a 5% loss in a low price stock. So we knew it was more an entry point, but that's not the issue. The issue is that I'm just afraid that the tariff thing is going to have a short-term effect in the sense that it might actually hinder some of the buyers going in to these steel companies. I don't know yet. We just don't know how it's going to play out. And that was a risk I wasn't sure of, but I did want to be in steel, and now it's run. So United States Steel X trading at 46.48, up 2.97 in leg B. If you're in it, I would just hold it. I try to hold it hopefully as an intermediate term buy. But at some point, and my only concern is that these steel stocks have run up on the expectation of tariffs. Tariffs actually turn out not to be so great. And I don't know how it's going to work out. So here's what I'm looking at. Would I buy United States Steel here or not? Because I really have to call it a leg. Yeah, I have no choice but to call this brand new leg B. It can fail because this is some kind of an aberration. It's going up on news rather than on the facts of earnings, etc. So I'm going to say to you, if you're long, keep it there. I'd have a stop at 38.50 for some part of it. If this is intermediate term, on a very short-term basis, if it takes out 41, I'd say, hey, reassess, take something off. It needs to hold here. In fact, it needs by Tuesday of next week, you want to see it in the 48s. And SLX, which is the one that I've been talking about for a year, the steel ETF, trading down from yesterday. It's up today, but it's down from yesterday. This is really telling me more of the story. And the story says we have to wait to see how the steel stocks actually act in reality, not on just news. So I'm just saying to you, X, if you ask me would I buy it right now, I'd say no. I just find that the risk reward, even though it should technically be in a leg B, if it pulls back and holds really well between 44, it's at 46.40, between 44.50 and 43, I would say, yeah. Then I'm going to relook at it and say, okay, maybe now I'm going to buy. I just need to give it a few more days. Still dumping, they say. Nucor is up. All right, well, we'll see what happens. So that's my analysis. So if you were to choose putting a little money into your AAOI or United States Steel at this particular point, because steel has at least proved itself by being strong, I would put it into the steel and have a reasonable stop at 46.29 right now. I'd have a stop at about 40. If it's an initial position, somewhere in the 38.80 area. Whoa, that's way too much. I'd rather say small position now in U.S. Steel. This could be the sector that really turns the market around upside. It needs to prove itself. That's all. I loved it earlier on, but now the news is out. Okay, so now what I want to do is I had a couple of things I want to do. The S&P, let's look at this again in terms of that big candle. You see the S&P is down 13 at this point. It's got the arch formation, made that all-time high. Did I not write that in? I thought I did. Yeah, 2872.87 on the 26th of January. it drops very sharply to the 25.40s. Now it's trading and goes to 27.90s. Now it's at 27.02. I'm concerned. I'm very concerned. I think that this candle here, this weekly chart failing, and then the monthly with the potential Chapman wave Roman candle, I'm just saying to you, 26 right here. This is what I'm saying. This trend line right here, 26.80. That better hold over the next week or so. I want to see by Tuesday or Wednesday of next week an attempt to get to the 27.40 level. The QQQ. Now QQQ made a peak C, but a gray C underneath the underneath the previous 170.95 high of the 26. This is what we always look for in this double top V-shape formation. Is it a double top? We'll know it. 166.01 down $1.20, down 0.72%. If it's one of the bigger percentage decliners, if the Qs start to trade in at 164.30 or lower, I'm just saying to you, watch out. This is tough stuff we're in. And the weekly chart had so far it's a right shoulder failure, but give it a little time. If it breaks above 170.95, I've been saying all week it needs to go to the 172s, and then I'm going to be really impressed. But until that happens, watch out. And this skinny little wick that occurred in February, watch out. If the in March, if the Qs break 163 support, that's going to be very negative. IWM, remember, it already made the peak D. It's pulling back. It's up 45 cents today, but it's pulling back from that peak D. Watch this. If it goes under 148, it's trading 150.77 at any point. This is going much deeper down. Weekly chart is not looking very good technically, and the monthly chart is the one I've been talking about all week, is giving me little shivers down my spine because it looks like it's holding the 9-period moving average, but if it starts to trade under that 9-period moving average in the monthly chart, under 148, that's going down to retest the lows. Let's go to gold. Gold was down earlier. It's still down. It's down 7 at 1310, getting close to the 1300 200-period exponential moving average support, and the monthly chart has 1297. So that's the area that needs to hold, and that would imply to me that the dollar, the XY, is doing very nicely, and it is. It's down 4 cents, but look what it's done. It's gone to a leg B. Now, is this the second arch formation? Is this the one? It's going to be really important. Why? Because this weekly chart has made its first leg A with the technicals at least attempting to turn up. I'll talk about that when we get back. We'll look at crude oil, we'll look at bonds, and that's going to be very important. Be right back. Basil Chapman, Dow's on 128.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So let me just do this. Sketches, SKX, trading at 40.97. I was asked about it. I like this kind of stuff. It's kind of under the radar. It's, it's in the clothing area, accessories or whatever, Sketches, shoes, USA. I like it, and it's trading at 40.98. It could trade sideways, but it's holding really well at 40.99. So the answer is yes. If you're long, keep holding it. I'd only get worried if it went under 37 in the next 2 weeks. I think it's looking very good. Would I buy it right now? I'd probably say, as a safety haven, at this particular point, it seems to be holding well. I'd put it into my repertoire. I'd put it into my portfolio as a stock that I wouldn't get too carried away. But yeah, at $41, I'd buy it. And I'd just make a fairly tight stop. Give it at least 2 points. You got to give it at least 2 points. And let's look at it again in a few days' time. So yes. Next question. I want to get to these questions because they're actually from. I don't usually get. I don't know when last I got a question about Box. All of a sudden today I'm getting 2 questions about Box. Box Inc. This is a San Francisco, California company. I can't remember. It's in the software area. It made a peak E in the monthly chart. It's been a spectacular run, going from IPO back in 2015, spikes over to 24, and then just drops down to the 9 area, hits 24s, and now it's trading at 19. Must have had bad news today. Made an F in the monthly chart, and that was a rogue wave to the upside. And very poor technicals now. And the daily went to a new high, recovery high. Whoops. Yeah, it went to a doji candle yesterday, and today's down. It's down at $19, $19.12, down 4.92. So let me just have a look. Yeah, this is a brand new move. It failed in the middle of a move. It went A, and then it goes A, B, C, D. That's a peak E, perfect peak E. Comes back down under the previous high. Remember, that's what I've been saying about these stocks now that have been going up. But when they make Ds under the previous highs, that always makes me kind of nervous. So, yep, it goes to the 200-period moving average. Fabulous turnaround. It goes from the 19s to the 24s, and then all of a sudden, today's news, it's at the low of the day. Now, the question I had was 2 questions. One is it, if I've held this for a long time, what do I do now? If you've held it for a long time, hopefully you've taken something off already. But if you haven't taken anything off, right here, I would immediately take something off. I can't tell you how much it has to do with tax, it has to do with IRA, whether it has to do, but I'm just saying my philosophy is that something's here that's not good at all. I don't want to hang around and see if it goes down to the 16s and then the 17s and then test the 17 200-period moving average, even though it's only 2 points. I'd rather say I'm getting out of some of it, and if it rallies sharply, I can make other decisions. Question is, would I buy it or sell it here? And that was the other question. Hector wanted to know, hi, Basil. Box gap down 20% today. Would you suggest a nibble here for a quick bounce up? Thanks, Hector. So, Hector, my biggest problem is that sometimes we go for a bounce, and then what happens with the bounce? Look, that's what happened with me. I wanted the bounce that would get the Dow. We had a lovely core position from the day after the exact low. And then as a trade, I wanted subscribers just to get in for that drop in C going to a D. Even though it was a gray D, meaning it was under the major high of 26,616 in the Dow. And then look what happened. We had two chances to get out with a profit, but I do it only once a day. I couldn't quickly update it, and we landed up taking a bit of a loss. And that's I don't want you to be buying something here when the trend in the monthly chart in the leg F, it hasn't made a peak F yet. We have to wait for next week to confirm that. But the monthly chart is in an E, and it's under the 9-period moving average. I'm just saying to you, I would not even think about it, because what's the big deal? You buy it at 1910 right now, okay? Let's just say it pops up. It has to pop up to the candle high, not the high of yesterday in the 24s, but today's candle of 20.83. I don't know if we can do that. You've got 20.16 as the 200-period moving average resistance. The general market is in a downtrend here. No, I'm saying no. Now, the other thing is, get back to it. I would recommend taking something off if this is your longer-term position. Why? Because something's happening and that's not good news. But in this case, I would say to you, if you've been in a longer-term position, you still have a good cushion of profit. That means that you can get something out now at 1911. Now it's different, because if it pops up at any point, raise the stop to today's low. If it goes under today's low, I don't want any part of it. So inside day tomorrow, it has to be above whatever the low is. If it rallies into Monday or Tuesday, raise your stop to the level that the low of today. Let's just say the low is 19 round number low today. That's a good sign if it can hold. Then 1890 or something would be a stop. But in the meantime, if it rallies, just raise that stop proportionately. If it can fill the gap without taking out today's low or whatever the low is today, that's a good sign. I love it when stocks fill the gap. But this is an island reversal. I don't like island reversals. And that makes the low that was made right here on the 15th of February at 2150 real tough to break above. So far, there's an island reversal of a major high, an all-time high for this thing. Be careful. So long term, maybe keep some of the position because you've had a long term, but definitely get out of some. I can't tell you get proportions. Me, I'm out. I'm gone. I don't mess around. Now, what I would say to you is, if as a longer term position, if you know the company well, I don't know, if you know it very well, and you don't think this is some kind of a pretty serious top, then you can manage the position. If you think this is company, this is it for now, at least in this cycle, then obviously you know the answer to that. Okay, enough with that. Let's go to the TLT. Now, this is going to be very important. TLT right now is at 118.52, down 23. Under normal conditions, for a long time, I always say that money migrates from the fluctuation of securities, equities, to the safety of bonds when markets start to turn down significantly. So far, you're off the 116.51 low. You're up 2 points. That's pretty good. But you've come down, in a month, you've come down 4 or 5 points. That's big. The weekly is trying to turn around. But if you go to your, I haven't got it up right now. Let me just get that. I'm going to just get out of this for now. Workspace, save, yes to all. Okay, here we go. The long-term chart says that the 30-year T-bond yield, the white one, the brown is the 10-year T-note yield, and the cyan color is the 5-year short-term for shorter term, 5-year T-note yield. The leg C that was made, it's coming up right now. In the weekly chart is probably going to be, almost certainly going to be a peak C by tomorrow. I don't see how I can get to 32.21 in the next day, a day and a half. So that says we've got a peak D in the weekly of the 10 and the 5 years, only a peak C in the 30-year. I think that's going to a D. I'll talk about that when we get back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archived workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget Steve Rhodes coming up, Dave White, you've got Tom O'Brien, you've got Andy Heck. Now, a couple of questions I had. I don't know if I can deal with it. Tomorrow's Technical Friday. This is a very good question. What's different about those great legs versus the previous that turned into great long trades? Most important, how do we learn from the past so we better understand to go long or short the great legs? So that's a good question. I'll deal with it tomorrow. I've covered it actually many times in different ways, but I'll try to clarify. Here's GSVC trading at 812 unchanged. Question is, would you add to this for the person who's already got it? I'd say, yeah, I like the action. It's acting well. Probably I would wait a day because it looks to me like it does want to do some testing of the 7.8 area, 7.80 area. But in your case, because it's holding so well in this market, yes, this is the kind of stock looking out that you could add a little bit more to. So now let me just do this. I get questions every day about, I haven't been able to get to the others, but Boeing. So Boeing is down 5 at 356.84. What I said to subscribers is, for the first time, I spent a whole thing on Boeing. I've got a leg D that looks like it's making a peak D in the daily, 371.60, the high of yesterday on the 28th. It's a leg D in the weekly. It's a leg E in the monthly, and I got a peak E in the 120-minute chart, and that's telling me that stocks like Boeing, like Raytheon, this is the defense area, the area that's just been immune, is vulnerable. Now you've got so many areas that were areas that people could go to when the market was weak. I am very concerned about this, and the reason why I call those gray letters to the upside is if they continue acting very well, that means you can just raise your stop, and the stop takes care of everything. If they fail, like the H pattern, as we have in the Dow itself, now all of a sudden you're looking at this and you're saying, what other pieces of evidence is there to say, watch out? And that's the weekly chart with terrible technicals, the monthly chart with that Chapman wave Roman candle, and this year the 120-minute chart gave a peak D and a Chapman wave 5 conclusion, and this is like almost like it's one single leg down, and we've broken the left side as support. I am very concerned about this. I'm not sure how speedily we will repair the damage, and I'm suggesting sideways is the best we've got, but probably lower lows and lower highs. I'll be back tomorrow. Have a great day. Stay tuned for Steve.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.